Hi Fast Track Property friends, welcome back again to this quarter updates for the private property market. Right, every quarter I'll do this HDB followed by the private market. We got the latest news and numbers from URA on the 28th of January. So let's look at the numbers today on how if you're looking for a property or you're looking to restructure your property, you've not done that yet in the past 2 years, what the numbers tells us in terms of the performance of the private market last quarter and year on year. Right? What are the big boys doing? What direction can we get from the broader market, and how can you then position yourself, right, if you are looking to buy your next property or to multiply from your existing property? Okay, right? So here you can take a look. Yeah, this is the property price index by type of property. We have residential, which is the landed and non-landed property market, right? We have the office and we have the retail sector also. So you can see that the retail sector is really coming down. It's still on a downward trend. Offices are on a downward trend also. I think I spoke about this before. During the COVID period, many of us were actually going in to purchase offices in the CCR area, and I was really concerned about that. And anyway, it's an area which I felt is not something that I wanted to risk going into. And the one that is an outlier, of course, is the residential market. It's the only line chart that is moving in the opposite direction, right? Here you can see that our index today is now at 173.6. Yep, we are at the all-time high, all right, surpassing 2013, surpassing back then in 2008. Yeah, we're the highest ever right now. In the last quarter, we experienced an increase of 5%, right? Let's now break down into per quarter, right? Hang on. Okay, so the full year, we experienced a 10.6%, right? For the first quarter, you realize we increased by a 3.3%. Yep, this is for Q1 2021. Second quarter was a mere 0.8%, then 1.1%, and we shot up in the fourth quarter of 5%, bringing up the total year of 10.6%. Yep. So market has already gone up a lot, really fast and furious in the fourth quarter. And for the residential sector, is split between the landed and non-landed property, right? So the darker gray will be the non-landed, and of course the lighter gray will be the one which is the landed property. This has also gone up for landed properties. We are again at an all-time high together with the non-landed properties. For landed properties in Q4, they increased by 3.9%, bringing the overall price increase for landed sector by 13.3%. Yep. And then for the non-landed properties, the condominiums and apartments, it has increased by 5.3%, bringing the overall year increase by 9.8%. So what does all this really mean, right? It will actually explain to you that prices are at all-time high, right? Like I was saying again. And should you be entering the market at this time? And does it mean that every project or apartment or landed apartments in Singapore has gone up in that type of scale? Right, obviously some has gone up faster than the other, and what or which segment should we be looking at? Personally, I felt that because of the cooling measures that was announced in December, the landed prices should have some price adjustments, especially for those properties beyond 3 over million, 4 over million, right? And the reason I say that is because of the quantum and the borrowing power. And I also personally believe that for the landed segment, the leasehold properties will start to retract back, right? Because I've never been one to encourage anyone actually to purchase a leasehold landed property, because I just felt that it does not make sense, right? But having said that, because the freehold has gone up so much, all right, the price gap between the freehold and the leasehold is so wide that naturally, in terms of basic economics, the leasehold prices has also gone up. Right, but I think this year, in the following 2 quarters, we should look at some retracement in the landed property area. Okay. And for the condominiums, well, I'll show you the next few slides and let you know my thoughts, what I think we should look out for, and what could be something that you should consider on your own. Yeah. Now, this slide shows you the breakdown basically on the different regions of Singapore. You have your central core, your core central region, the rest of central region, and of course the OCR region. Right? A lot of you should be quite familiar with all this zoning, right? From the center of Singapore, which is the CCR, then you have the RCR, and obviously the OCR. Here breaks down, I show you two different categories, because for here it shows you 19 and 20, and then it shows you the two other quarters for quarter 1 and quarter 2 of 2021. Obviously you can see for the bottom segment here, the entire OCR has increased by only 3.8%, right? The RCR has gone up by a whopping 16.3%. So it seems that for the past 1 year, in fact for the past 2 years, so yeah, for 2020, in fact, they also increased the highest amongst all the other regions, right? And for last year, it increased by 16.3%, right, for the RCR. So RCR seems to be the all-time favorite, and at the same time, I would just use this maybe as a guide. It could be right now, if your budget is within, you have a good budget, right? It seems that a lot of good value properties, if you can find it, would be sitting in the CCR region, because it has not really increased in price. This slide shows you the pipeline supply of private residential property with planning approvals by expected year of completion. So this basically tells you what is coming into the market, right? On its indicative year, means that this would be when they're going to obtain their TOP, all right? So right now, I think inventories, as all of you know, you'll see in the next few slides, are really very low, and you might not get a good new launch property perhaps. I think this year, with new inventories coming into the market, and this would be for projects that can get their keys, you might have a better choice if you're looking for brand new property, if you really need to have brand new properties per se, right? In 2022, we expect to have about 11,000 over units coming into the market, or rather ready for delivery. In 2023, we have 19,000. This also includes the ECs, right? The ECs means that they can move in. Obviously, it will not come into the resale market, but for the rest, obviously, the owners have a choice of putting it in the resale market. Yeah, 2024 and 2025. Now, you can see beyond 2025, right? In 2026, the number of inventories would have dropped quite significantly, and beyond that, there are not many new properties for people to consider. All right, brand new properties. This would mean, again, properties that are going to obtain their TOP. If you look in the past, you realize that normally when we reach such a situation, there will be some changes in terms of our present cooling measures. You see back in 2017, when they actually relaxed one of the measures. So this is a little bit of gauge whereby you can see that perhaps 2 to 3 years prior to inventories being low, right? Perhaps somewhere in 2024, they might do some tweaking of the regulations, and that might give us some position ourselves to be just right for them to make a tweak to actually have the uplift of your present investments for you to get a capital gains, and also when you want to enter the market. This could happen, could not happen. This is just one part of an indicator that I look at. Yeah. Now, this is an interesting part. It shows you the total inventory. Now, this total inventory, what you saw in the earlier slides, this shows you end of 2021 fourth quarter. There are in total 46,000 units that has not been completed or obtained a TOP. All right. So the numbers have actually came down a little bit already, and this will form part of the previous chart that you saw of those that you're able to take the keys from. Once you're able to take the keys, the inventories here will actually come down. The ones that you see in orange, this actually includes the ECs, all right? These are basically potential supply from the GLS and from ECs, the sites that has not been granted planning approvals yet, right? So for 2021, or rather back in 21/7, right, you can see that there are 19,000 over here, and that's where once it has been approved, it adds up into the blue column, right? This also consists of properties that has not been sold yet. Yep. Then you have in 2018, 9,800. It consists of GLS and en bloc. For the quarter ending 2021 fourth quarter, we have in total 6,900 units that will be poured back into the 46,000. So this will tells you that in the next 1 year, perhaps the 6,900 might come back into the primary market as a new development sale. Now this is interesting. It shows you basically the demand and supply curve, right? How much we are actually selling and how much is available for the primary launch. Back in 2016, we started off with 19,000 units. All right, then we started to have the en bloc coming in 17, right? 19 over units, GOS and en bloc. This caused the entire the last wave, isn't it? Right, all the way up, we have 34,000, and now I think this has been something I've been raising my concern about the dwindling amount of supply in the market available for choices. Yep, 30,000, 24,000, and presently end of last year we are only at 14,000 balanced units. So if you realize you're out on the hunt looking for a good new launch project, there's not much to choose from, right? There's not many to choose from. It's just you can only choose from a few handful, right? And some of the developers have not really changed their price yet, and therefore you're paying in some projects at all-time high prices also. Yeah. The bottom part shows you the number of units sold. Back in 2016, 7,000. In 2017, we did a very good year of 10,566 units. Yeah. And then you hovering below 10K. And for last year, we hit all-time high numbers of 13,000 units. All right. So it seems that in the next quarter, this is going to be the first time. I'm not so sure whether it's the first time, but from the data I can gather so far, it's going to have a cross section, right? Whereby the number of units is going to fall below the number of people buying the units, right? And this seems to suggest a high demand and low supply environment, all right? And of course, this would mean that prices is going to continue to go up, right? Once you put all four graphs together, this is what we will get, right? So basically, this tells us this picture. The question is that, are the prices really going to move forward as crazy as last year, right? What about the resale market? The resale market, basically, this would mean the secondary market, right? In the sub-sale, in the owner selling owner compared to buying from the developers. That's the meaning of a secondary market or resale market. Here I've showed you data of from 2010, right, all the way to 2021. So you can see this is how the graph looks like, right? In 2010, we did 19,000 units. So 19,000 over units exchanged hands in 2010. That was again part of the upswing, right? Part of the bull market. In 2011, it came down to 14,000, 13,000. And of course, after all the measures were all released, we were hovering below 8,000, right? In fact, in 2014 and 2015, we actually faced with one of the least transactions in the resale market, right? This is where I think you could go for shopping, isn't it? You go and you look for a unit, you can look for 20, 30 units, and you still cannot make your pick, right? Today, or rather last year, when you're looking for properties, when one property is listed up, you have 10 other competitors. And many of them are buying properties without even viewing them, right? So that was the market the past 2 years. But last year was exceptionally crazy, right? For the past decade, we have hit the all-time high again. In terms of the numbers, we hit close to 20,000 resale transactions, all right? So last year was really crazy. And when I look at these numbers, it will only mean a few things. Number one, the market has, through social media outreach, I think a lot of families are finally moving into the private sector, right? Selling their HDB, owning 2 properties, or selling HDB and moving into the private condominium market now. While this seems to be very encouraging for us to move and upgrade into a condominium, right? It really depends on, personally, what I think, what you buy and your overall strategy, right? Buying and owning a private property is also dangerous, especially of its higher quantum. And if you do not come up with a good plan, you have to understand that with a higher quantum compared to your HDB property, your initial capital outlay is also much higher, right? Second thing, you take on a much larger debt, your loan, and you have all the other expenses that comes along with it, like your property tax, your maintenance, all this all comes into play, right? So the scary thing is that if you buy a wrong property and it moves sideways for the longer term, all right, it will mean that your capital outlay that you have actually come up with is going to be stuck for the longer term, right? So always be careful. This does not mean that you enter the private market is going to be, you're going to make a lot of money. Buying the right property at the correct price is really the key, okay? Now, what about en bloc? Right, en bloc is something that I do not think I will be speaking much about for this year. I think that it's going to be very quiet. But having said that, en bloc for last year was quite good. I spoke a little bit about this in my previous video, right? For all of you who have missed it out, you can click on the card here. It will link you to the video on en bloc, or what are the en blocs that was actually transacted last year. Now, the last en bloc that was done was actually at High Point. Now, this was the one that was done in December, and this was also the one that exited. Exited meaning to say that the developer, right, walked away from the deal and forfeited $1 million deposit, right, because the property managers came out after that. Now, the thing is that I think en bloc will still, though it will take a break, but it's still something that is really important for Singapore, Landscare Singapore especially. It is one of the ways that is a strategy that is needed, right, for redevelopment, and especially for developers who kind of missed out the opportunity of getting something at GLS. They can then go into the resale to get an en bloc unit, isn't it? Therefore, I think developers will still be hungry for land, right, in Singapore. But personally, my thoughts would be that they should be choosing more strategic locations, smaller plots for them to exit easier, right, instead of taking on very large risk, right, on mega projects like perhaps Mandarin Garden, right, it's too big, or all the other mega projects that is presently trying to go en bloc. I think it's going to be a huge challenge unless the owners brings down the reserve price. Now, I think the developers will not be very desperate for land, for large scale land anyway, because I think the owners will be more desperate, right? As the lease reduces, it'll be cheaper for a developer to buy in another 5 to 10 years anyway. The one that will be more excited to sell, right, will be the owners. Yeah. So, where is the market going, right? Again, this is just my personal opinion where I think it's happening, and if this makes sense to you, well, then join me together while we look for the next opportunity. But if this doesn't make sense to you, it's just a judgment call. This is an educational channel, right, for you to just consider my opinion, right, and then how you should act or plan your personal real estate and your family's real estate for yourself. Yep. So for those of you who have not restructured or looking to buy your first property, how should you start to prepare? What I said earlier, is there still a silver lining? Is there an opportunity? Or are you, from what the chart suggested, entering in the all-time high, and the next thing that's going to happen is you're going to see a nosedive, okay? Yeah. So now, this is quite interesting. I shared this in my inner circle and in my Facebook group. For those of you who has not joined yet, the link is at the description below. You can click on it. Yep. This is where the members enjoy either a live video from me or earlier releases of my YouTube videos. Yeah. So presently, I personally feel that it's a mixed signal for the big boys. So this is Lentor area, MRT station. This was done last year, sold already. Most probably we should be selling it this year or at end of the year. The land bid price for this parcel of land was at 1204 per square feet, right? I'm just giving a very nominal break even of $600 per square feet. I have not discounted the 7% yet for balconies and spaces, right? So this is just a simple add-on and estimate selling price. So I think Lentor, this mixed development here, which is just right next to the MRT station, could be selling in the range of 2,000 plus minus per square feet in the future. Yeah, and this was actually released in the market. It was released for sale somewhere in October last year, and the bids closed I think 18th of January, yeah, this year. Oh yes, so 18 January. It was launched in September 2021. Altogether, there are 4 contenders, right? And this was released to the highest bidder at $11,409 per square meter. This will actually translate to a land bid price of 1,060 per square feet, right? So it's just here next to the MRT station also, maybe just one street away, yeah? If you do the same numbers as the above, you will see that in this OCR area, the break-even will be at 1,660 per square feet, and then perhaps the selling price will be at 1,885 per square feet. Now, this is the estimated selling price for the developer. I'm not saying that this will be the price that the developer can sell. I'm just telling you that this could, even at this price, developers are sitting on profits. Obviously, closer to the launch date, if the market is still very buoyant and is very bullish, the developers can sell even much higher if they want to. But this would then translate to me a risk, because if the market does change and U-turns, it will also mean that the developer has a choice to reduce their prices, because this is their margin they're playing with, isn't it? Right? So, but if you just look based on apple to apple, if they were to sell based on this price, you will see that it's actually a difference of $165 per square feet. That would mean per 1,000 square feet is a difference of 165K. So what does this mean? To me, I think that this will be a very good position, depends on how much the property is selling for. But if the market continues to be quiet, or rather, if the market does stay quiet, okay? Right now it's not quiet, right? Does stay quiet, this is a very good arbitrage position that I think could happen. And if this is really launched at this price, it will actually show in the general market that the developers are quite careful, and therefore, as you know, sentiment will then spread on, and we should see some changes in terms of the property market this year. Yep. So this is an example of mixed signals, right? We are faced now with low inventories, a significantly high demand, yet we have the new measures being announced in December, right? So developers are scared. Therefore, this translates to low bid prices in this area. We also mean that a possible lowering of price for this parcel of land compared to its competitors, yeah? So then how? What are we supposed to do, okay? Let me just show you another example. Now, this place is called Jalan Tembusu. This was also, the tender closed in 18 January, right? Where this place is actually near to Tanjong Katong Road. We are minutes towards the new MRT station, minutes to the Parkway area, basically District 15 area. Behind the Canadian International School, as you see here, right? Very nice piece of land. This was tendered 8 contenders so far, closed at 14,000 per square meter by CDL, right? Here you can see that for this RCR, District 15 area, the land bid price translates to about 1,302 per square feet. It's going to be lower than that if I include the 7% for the balcony spaces. But if I look at just this surface, 1,302 without the 7%, the break-even will come out to about 1,009 per square feet, right? Unless inflation takes place and then we have crazy prices for materials. So the estimated selling price that you're looking at the same margins is about 2,160 per square feet. What is surrounding it at the moment that is selling? And now we have Amber Park, right? Amber Park is nestled also close to the MRT station and to Parkway Parade. Now, though I'm comparing really different things, one is an en-bloc unit, land bid price, their cost price was 1,515 per square feet per plot ratio. This is a freehold land compared to a leasehold property, okay? But to be honest, if both are new, unless you intend to hold this property for 50 years, not going to be a difference if you're holding it for 5 to 8 years, yeah? The break-even for this property for Amber Park was at 2,115 per square feet, right? and the average price that has been doing for the past 2 years was about 2,464 per square feet. Right, there are still some units available in the market for sale. Now, if I were to just do this calculation based on a break-even price and the average selling price, we are looking at a profit margin of 16.5%. Yeah, and if you use the same profit margin for Jalan Tambusu, it will actually translate to 2216 per square feet. All right, so 1902, 16.5% is at 2216 per square feet. That's a difference of $248 per square feet. All right, so for 2 plots of land, you're talking about 248,000 difference for $1,000, $1,000 square feet property. Yeah, so I think this is also quite interesting. It's a space that I'll be looking at for once they launch. But then again, it depends on the launch price on the day. Yeah, okay. So this is something I think for Amber Park to be keeping an eye on, and if needed, I'll be seeing that if they launch at a lower per square feet, right, it would mean that Amber Park could have the possibility of reducing their price. Now, let's just see in the next couple of months. Right, so some of the key dates for me basically to see what could be moving forward and what I would like to have at least some guide in the open market will be this. 8 March 2022, just next month. All right, this is something that we are selling today. Dairy Farm Residences is a mixed development. You have one level of retail spaces. All right, just behind the German European School. Yep. So this piece of land, right, is already up for bids. It will close on the 8th of March. Right, so let's just see what would the price be at the time. Right, some of the other dates you could look at would be, okay, so what you're seeing now, this is actually under the confirm list, right? So for Pine Grove, Dunman Road, Lentor Central, all these are the dates that are going to be released, so you could safely put in another 3 to 4 months before the bids are closed. So I like to look beyond the second half to kind of know the gauge of what's going to happen in the market. Yeah. The bottom right now is available for application. This is under the reserve list, right? So I'm not so sure if there's anyone that actually applied for it yet, but then there is a cut-off price that the URA is looking at, and if it's triggered, then I think it will be announced for all of us to know. All right? There's white sites at Kampong Bugis, or this is a place I like, at Kallang area, and then at Woodlands Avenue 2 too. I think this is also quite interesting because this is a mixed development, white site, just next to the MRT station. All right? So these are some things that personally I want to look at, give me some guidance before I see which direction you're going to go into. Okay? All right. Now, this is more exciting, right? A lot of us are looking to know what should we buy, what's available in the market, right? What you're going to see right here is going to be the company's collated projects on what's available in the market, right? It's been subdivided into North and Northeast region, the West region, right? The East region, what's available? Is it freehold? Is it a leasehold? Which district is it located in? What's the per square feet selling price from? So of course, what's units available, we got to check individually, right? It changes every day. And for the central region, how many units are available divided into the different districts? Yeah, some examples here will be like Pullman Residences going for 2,655 per square feet, right? You have 10 and Evelyn freehold properties. So well, this is what's available that you can take a look. Now, all this is actually this and the next slides is the PDF is available in my group, Facebook group. So for those of you who are already inside, right, you can just download it, use it as a guide of what you are looking at to buy. All right. Now, this is also out. What are the potential new projects that might come into the market this year? If you're looking for a particular district and looking to come into the market and say, hey, this is going to be, I missed the boat over the past 2 years, now I want to be the first mover advantage going in to buy the new projects, because the developers are going to increase the price anyway in future, and I want to catch the boat at the right time, right? These are some of the new projects, right, that you could consider. But anyhow, what I just said earlier, it really depends on the price. It does not mean that it is a lottery ticket. As long as you bought a brand new property, you will sure make money, alright? That does not mean it. Okay, so so this is where we are, right? Again, divided into the different regions. In the west, we have Flint Park under CS. CS means collective sale. We have GLS, obviously this would mean leasehold property. Flint Park is because they bought the property as a freehold and they're selling it as a freehold. GLS, you have Sim Barracks, parcel A and B. What you will see here, it tells you an estimate of when they're able to sell the property. This is third quarter of this year. It also tells you what is the land bid price and what is the land cost of this property. Add on the cost of development, mark it up, and you have an average of what it could be at the time. Yep. You have a central region, GLS again, CS, AXA Tower, Fuji Xerox Tower, Realty Center, District 4, District 9, collective sale, right? You have your Northeast region, and then you have your East region. Okay, this has been launched already. Belgravia Ace, it was doing very well last month for its sales. Personally, I do not like to put money into cluster housing, but if you are those that love it, right, this is a potential for you. East region, again, you have collective sales and GLS. Now, if you zoom out and take a look at the entire what's available this year for sale, you realize that a lot of them consist of collective sale. All right. Now, why did I mention this? Is because all these properties that were purchased in the central region, the east region during the collective sale phase, was they bought the property somewhere in 21.9 during the upward swing. It would mean that the developers bought the space expensive. All right. So unless they price themselves very competitively, all right, if not, this year we should be looking at a lot of really good discounts for the properties if they're able to price it correctly. All right. And I think, but if they need to price it high, I think it's something that you should be concerned, because for the broader market, whatever that is going to close this year in terms of GLS, the developers have scaled back, and 2 projects has already shown that. Like I said, key dates I'm going to look at will be in March, and then most probably in the second half of the year, what is going to happen to the market in terms of the general direction. Yeah. So anyway, this is just for you as a guide. To me, good for you to have. It gives you some information, but whether you should put money into this place, what is your time horizon you're looking to hold the property? Are you going in for own stay? Are you going in for investment, right? It's something that you and your spouse yourself have to discuss and decide upon. Okay, well, in conclusion, personally, I feel that rent where you stay and buy where you invest is still the correct plan. Do not limit your choices in purchasing a property because of your immediate or short-term circumstance or your immediate needs. And I always give the example, if you love to live in a community, a gated community with facilities, and you want to have a landed property, right? You might not necessarily have to own that property. You can always lease that property and put your seed capital into something else that makes more sense for you. So this is something that I've always believed in. Yeah, and I've done the numbers. If you want to find out more about it, well, join me on the Zoom session and on a consultation. It's a one-on-one. The link is also at the bottom, and we can have more chat on that. Personally, I also feel that you're supposed to prioritize your seed capital. This to me is really important. I think a lot of us has help with our CPF, right? For us to buy a bigger quantum property, but at the same time, if we throw it into a project that is going to go sideways and stuck for the longer term, I think is a missed opportunity. Yeah. And for the on-block market action, again, from my previous slide, I was saying that developers are going to scale down strategic locations, all right, smaller plot, bite size, easy for them to go in, make a profit and exit. Okay, bigger size action I think is not going to be seen. Personally, that's what I think. For all of you who are looking to buy your first property, is there really a silver lining? To me, yes, in a resale market, right? Be very picky with your choices, because to me it is not just a home that you're going to stay. It's a place that is going to be a burden, because you're going to finance a property, you're going to pay for it, all right? And therefore, I think you should be a bit more picky and choosy in what you purchase, all right? And going into a growth of safe haven projects, again, I'll put a card here for the link to the video, all right, on the left for you to actually look at. This will actually show you how I have a methodology on how to look for growth projects and safe haven projects. Yeah, and if you buy for an investment, right, if there's nothing in the new launch project and you want to look into at least getting your hands on something because you want to expand your portfolio, go into the short-term hedging, and that is going to a real estate hack too. I have a playlist here that shows you how I develop the co-living, why it makes sense, so at least for the next 3 to 5 years you're able to maximize that property's rental yield, right? Have a lot of capital, or rather a principal paid up by the tenant, have cash on a monthly basis, right? Roll that and exit in the next 3 to 5 years, right? And lastly, be prepared for a possible wealth tax. Well, so this is something that I've been looking at since last year. I knew it was coming. I have no idea how it would come, in what form it would, or shape it would take. And when I saw this, our Prime Minister in an interview with Bloomberg last year, it was something that tells me that it is going to come to Singapore. How is it going to position us as a country with our foreign investors is something that I am still not sure how it's going to happen. But in some form or shape, it would happen, right? I'm going to sign off here, but I'm going to put a sample, or not a sample, a cut of the video or what was in the conversation for you to just listen to, right? And with that, I'll speak to you again next 2 weeks. See you.
The other tax that you're looking at is a wealth tax. And as I understand it, you don't see this as a kind of temporary thing to deal with COVID. You see this as something structural, that you want to look at taxing wealth in at least some way.
I think it's an element in a comprehensive revenue system. You tax consumption, you tax income, you tax sins, and you should tax wealth, whether wealth in the form of property, ideally wealth in other forms. Now, property taxes we know how to do because we have them, we have refined them over the years, we've made them more progressive, and they make a valuable contribution to our exchequer. Taxing wealth in other forms is very hard to do. You know in principle you want to do it. People have tried capital gains taxes. That has some downsides. People have tried other forms of direct wealth taxation. I assess how rich you are and then knock off a certain percentage. It's not so easy to implement. So we will study this, but we need to find a system of taxation which is progressive and which people will accept as fair. And fair means everybody needs to pay some, but if you're able to pay more, well, you should bear a larger burden of the tax. And if you are less well off, you should enjoy a greater amount of the government's support schemes and benefits.
The underlying problem this is in Singapore you have been very good at dealing with income inequality. But
well, income inequality is somewhat easier to see and measure compared to wealth inequality, because I can track your income, and our Inland Revenue Authority has become very good at studying these things.
Yeah.
But wealth is much more difficult. It's amorphous. You can squeeze it here and it pops up in different forms elsewhere. Nowadays, you may have a non-fungible token.
Yes.
How do you know? Or Bitcoin. So it's not as easy to manage, but it is something which we do want to be worried about, because we would like to make sure that each generation starts off from as equal a starting point as possible. It's not possible to make it exactly the same, but within the limits of my ability, I will try to equalize if your parents can't provide everything which they need to for you.
You don't worry that a wealth tax will scare away the wealthy. That wealth, on the whole, wealth taxes the wealthy tend to be fairly good at avoiding them.
Well, that is one of the worries, and that is one of the reasons why you have to think about this very carefully. Because you have an agreement on a global minimum effective tax for companies.
Yeah.
I'm sure your clients have a view on that. And the idea is to equalize the playing field for governments so that you don't have companies playing shell games. I move my income here, there, and sometimes you see it, then suddenly you don't. But I have no illusions that a 15% or 20 or 25% minimum effective tax rate is going to stop governments from competing with one another to get projects which they want. And the competition will pop up in some other form. It's unavoidable. And I think if you do wealth taxes, you may well come up with the same problem.